3,800, 3,900.
We should have bought, I guess.
Well, yeah, that was another entry point, right? But I mean, we have seen, a tremendous run up and another drop in this before. Is there something different about the momentum right now?
That's the right question to ask, Carol. It certainly is true. It did have a massive drawdown, just like Amazon dropped 90% in the early 2000s. And the big difference this time is that was more speculative excess rally for really tech geeks. Now it's the mainstream getting in. There's futures, there's central banks potentially, but there's corporate.
Okay, I'm placing an order to sell short euro at 122.654. Okay. 122.654.
Right now, more of the same means price should go higher.
What about the emergence of other cryptocurrencies? And we saw that a few years ago when Bitcoin got really popular. Doesn't that threaten Bitcoin's rise?
Tim, that's a key point, and it's really survivor bias. Last year, there was about 4,000 tradable cryptocurrencies. Now there's about 8,000 based on CoinMarketCap.com, but it's a survivor bias that matters. So the Bloomberg Galaxy Crypto Index tracks about 10 of those. So it's the survivors. The winners will win and do well. But the thing is, they don't have the adoption, the oomph, and the robustness. And basically, they're just not adopted like Bitcoin. They might be better, but they're not the best store of value. So the way I like to describe Bitcoin, it's basically a collectible. There's only going to be 21 million ever created. There's 18.5 that have already been created. And it's the one that's being adopted. The market, the world has already said, okay, this is the one, versus like gold is the one, and there's a bunch of other commodities, and there's a bunch of other precious metals.
So wait, really quickly, 15 seconds. Is it a collectible or is it a currency?
I think it's more of a collectible and less of a currency.
That is really wild. You were the perfect voice. Thank you so much. Really, really appreciate it, because I think we're kind of watching it and understanding it, right, Tim?
Yeah, we are. And I just sent my team a note saying we got to get Mike on Quick Take talking Bitcoin.
Great.
Yeah.
Bloomberg Intelligence commodity strategist Mike McClone. I'm going to thank Charlie Vollmer for that, because he's like, you got to talk to Mike. All right, let's get back to world and national news. Over to Nancy in D.C. Hey, Nance.
Hey, Carol. Senate Majority Leader Mitch McConnell is sounding optimistic lawmakers will reach a new coronavirus relief bill before leaving for the holidays.
A bipartisan, bicameral agreement appears to be close at hand.
People briefed on the negotiation say the draft of the
Position open at 122.654. Short position.
as well as aid for small businesses, as well as about $17 billion for airlines. It omits, however, aid to state and local governments and lawsuit liability protections. Two members of the Sackler family, which owned OxyContin maker Purdue Pharma, have been taking questions today from the House Oversight Committee. They testified that they relied on professional managers for assurances that the soaring sale of opioids was on the up and up. Congresswoman Carolyn Maloney says the family has never accepted responsibility.
Purdue and the Sacklers worked to deflect the blame for all that suffering away from themselves and onto the very people struggling with the OxyContin addiction.
Democratic Congressman Jim Cooper said watching the Sacklers testify made his blood boil. The suspected Russian hacking spree that has roiled U.S. government agencies poses a grave risk to federal, state, and local governments, as well as critical infrastructure in the private sector. That's according to a new advisory. President Trump has yet to comment, but President-elect Joe Biden says he will make cybersecurity a top priority. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. It is Thursday. Carol Master along with Tim Stanovic. He's back in our Interactive Broker studio. I'm working from home today. This story, though, Tim, it is our second most read on the Bloomberg terminal. And anytime you put anything up about Wall Street and bonuses, it always trends high.
Just going to say that, Carol. I'm starting to see a pattern here. I've only been here for a few months, but once the story is about bonuses, it becomes among the top read on the terminal.
It totally does. And listen, this is the time of year when we start talking a lot about bonuses. And we've actually had a few stories stories already because of the impact of the pandemic and, concerns about, I think, banks and financial firms trimming some costs. But Goldman is planning to actually boost bonuses for the trading division up by 20%, according to those familiar with the matter, after the business reclaimed its stature as the firm's golden goose. Trading has been a high point or highlight, if you will, among the Wall Street firms this year because of all the volatility.
It has, and it's about time for Goldman because it sort of languished for about a decade, even though it was once the envy of Wall Street. And with this, obviously the firm wants to keep people from jumping to other firms run by Ken Griffin and Stephen Cohen, as the article outlines. But I also see, Carol, we talk a lot about the K-shaped recovery, and we just heard Nancy talk about the aid package, the $900 billion aid package for coronavirus relief. This epitomizes the K-shaped recovery, right? Fatter bonuses on Wall Street, while millions of Americans have benefits running out.
It's the really huge gap. Exactly. We see it in the financial markets. You're right. We see it among the Wall Street firms, which obviously are, directly connected with what goes on in the financial market specifically. And then you've got Main Street where people are just struggling to make ends meet.
Yeah, that's
make ends meet, right? They're basic necessities.
Exactly. And look, it's been a touchy subject in the past, especially following the financial crisis of 2008. But whenever we have a story about bonuses, it gets a lot of attention for a lot of reasons.
Especially in a year where you're seeing the banks. I mean, they are, seeing staggering gains, and you're seeing, huge jumps in some of their businesses. So, as we said, though, our most read or second most read story on the Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A lot of excitement on Wall Street, looking at records for the Dow, the S&P, NASDAQ. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks trading in the green amid a choppy session. Dow's currently up 115 points. S&P's up 17. NASDAQ rises by 78. The U.S. 10-year-old at 0.9%. Gold trading higher by 19. And transports gain 131 points. Among the main 11 S&P sectors, only energy and telecom were in the red. And leaders to the upside in the Dow, J&J, Home Depot, and Visa, while Boeing and Intel led to the downside. After earnings, Jabil rose as much as 10.6% to the highest since November of 2000. And in others, Bitcoin soared as much as 12% to a new record. Citron called DoorDash the most ridiculous IPO of 2020, and Robinhood to pay $65 million to end an SEC probe. Wrapping things up, FedEx reports after the bell. Live from the First Word breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. We'll be all over those FedEx numbers as they break. We'll ship them out as we can. This headline from the Bloomberg Professional Service: San Francisco issuing a travel quarantine effective December 18th. And to hear live breaking news over your Bloomberg, type SQUAWK, SQUAWK, on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Ship it out. I caught that, Charlie. I saw what you did there. Very nice.
It was
very
subtle.
Nice. I know. All right, Charlie Pellet, thank you so much. It is time for our weekly Bloomberg Green segment. It is brought to you by PGIM. It's the investment management business of Prudential. Join the pursuit of outperformance at PGIM. Learn more at pgim.com. That's PGIM.com. So we've got a mix of green and luxury, courtesy of Bloomberg News U.S. luxury reporter Kim Basine, who caught up with Patagonia's new CEO and heard a little bit more about how he's plotting for the future. It is definitely a green one at that. Kim joins us on the phone from Queens, New York. Kim, first of all, so nice to be talking with you. How are you?
I'm good. How are you doing? Oh, as good as I can be, you know.
Yeah, I know, right? There's always a caveat. Well, it's good to have you here with Tim and me. So tell us about this conversation and who you caught up with.
Yeah, so I caught up with Ryan Gellert. He's the new CEO of Patagonia, named a couple months ago. The previous CEO stepped down. They said it was a natural jumping-off point as Patagonia plotted its future. And Patagonia is going through a bit of a change. So over the past 4 years, they really doubled down on their activism, their environmentalist activism, and very anti-President Donald Trump activism. And now, with him exiting office shortly, they got to figure out what to do from here.
Yeah, it's a fascinating article, Kim. I love talking about Patagonia. I've been following the company for years. I think a big part of it is because I'm from the Central Coast of California, where Yvon Chouinard started this company in Ventura. And it's just like, it's seen amazing growth, but at the same time, it's been allowed to do a lot of this stuff because I think it's a private company. And I think that really differentiates it from a lot of the companies that we cover here. Kim, it really struck me what the company did for the election. It gave employees 4 days of paid leave to serve as poll workers. They were given time to write letters and text environmentalists, encouragements to get out and vote. Is this something that will continue under this new CEO?
It is. So over the course of the Trump administration, they sued the administration over a battle over public lands. They fought, oil and gas allies. They tried to get rid of some of his appointees for federal agencies, and that naturally means there's a whole lot, 74-ish million Trump voters who are not going to agree with that and not buy the pullovers and jackets that Patagonia sells. But this is what their brand is, and it really worked out for them. So in the first 3 years of Trump's presidency, they set sales records in each of those years, and now they're approaching about a billion in annual revenue last year.
Listen, this is an interesting company, and I highly recommend Yvon Chouinard. He's done a lot of talks, and it's just worth sitting down and kind of settling in with it just to kind of understand kind of the ethos of this company. What's interesting, though, because they are so concerned about the environment, they think about sustainability, they think about all the products they make, and I know they've been moving Kim into farming as well, but they've got their own still some things to work on, because I think about they talk about, I think it was a quote that you got from the CEO, we're a white-led outdoor company relying on recreation on stolen native lands that are not yet safe for all. And, there's things that Patagonia wants to work on and continue to work on to make even better.
That was really that really stood out to me, especially seeing all the other corporations out there making statements about first Me Too and then the Black Lives Matter movement over the summer. Everyone tiptoed around it, right? But this was a really stark, blunt statement that they made. Now, going forward, they're really on the environmental side. They're really considering new ways of doing business. So things like clothing rental, things like expanding repair services so that products last longer and thereby reducing waste. He's also wanting to take the brand into clothing resale. So that's things like ThreadUp and RealReal where you ship them old product and then they can resell it from there so that things get reused.
How's Patagonia thinking about its relationship with the Biden administration? What's it lobbying for?
What they're really focused on is the 30 by 30 proposal. That's something to conserve at least 30% of U.S. land and water by 2030. That'll help curtail extinctions and promote biodiversity and hopefully decelerate the climate crisis. Now, because they have this, they never fully agreed with the Obama administration in the first place, so they still have their guard up.
Yeah.
The CEO said there was a lot we agreed on, but there was also a lot we didn't agree on, and he expects the same with the Biden administration.
Hey, just quickly, just got about 25 seconds. Does he expect more support from kind of the corporate private sector when it comes to environmental issues? Because a lot of people talk a lot, but I do wonder about actions, whether they're keeping up with it.
I think they're trying to prove out this formula, right? They're trying to prove to everyone that you can make a bunch of money and you can also be good for the environment at the same time. And if they can do that, then, well, other people will pick up on it.
Fingers crossed, man. Everybody always talks still about that Black Friday ad they did a couple years ago. Where
Don't
buy this jacket.
Yeah. And look, it worked for them. People bought the jacket.
People bought the jacket.
Even though they were closed on Black Friday.
And it wasn't their plan.
Yeah.
Kim Basine, great to hear your voice. Bloomberg News U.S. luxury reporter Kim Basine. Check out all of his work on Twitter at Kim Basine. Also, you can go to Bloomberg.com or the Bloomberg Terminal. Listen, I am kind of all in on this company too, right? They're not perfect, but they're trying to make it better.
They are. And I really like the idea of buying less and using less, consuming less. They're making more out of recycled fibers. It's a fun company to follow too. The book that Yvon Chouinard wrote in the early 2000s, Let My People Go Surfing, the first business book I read, Carol.
Is it really? That's a good one. I could see that being your first business book.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
My house is freezing.
The studio is freezing too.
It's like, but you can put in a ticket. If I put in a ticket, aka my husband, he's like, "Are you kidding? Now you're cold."
I put in a ticket and they turned up the heat. So ask and you shall receive.
I'm a little jealous. All right, we're going to get to Dave Wilson and his chart of the day in just a moment. First up, back to your top business stories, and let's look at that trading day. We've got 29 minutes to go, Charlie Pellet.
Indeed, 29 minutes to go ahead of the closing bell. Lots going on this Thursday. San Francisco issuing a travel quarantine effective December 18th. We've got the Dow, the S&P, NASDAQ, all trading at records right now, right to the numbers. Stocks are pushing higher on optimism about a stimulus deal. S&P up 15 to 37.16 right now, up 0.4%. The Dow up 114, up 0.4. NASDAQ up 66, up by 0.5%. 10-year down 430 seconds. 10-year yield there 0.92%. This headline from the Bloomberg Professional Service: U.S. states were also hacked as part of that suspected Russian attack. We heard about a number of government agencies, and now word is states were also hacked. A developing story. Stay with Bloomberg for the very latest. The Dow, the S&P, NASDAQ all advancing. As I mentioned, we've got gold up $19 the ounce, up 1.1%, $18.84 right now. West Texas Intermediate crude up by 1.1%, $48.34 a barrel on West Texas Intermediate crude. Dr. Jason Farley is a nursing professor at Johns Hopkins Bloomberg School of Public Health, and on Bloomberg Television and Radio this morning he said, if you are thinking about heading to family gatherings for Christmas, don't.
Here in Baltimore, we have opened our field hospital again and are needing to send patients from our emergency departments who don't seem like they need admission directly to our field hospital. So it is an extremely important issue, and I highly recommend all families consider strongly not traveling and not visiting for the holidays.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Job cuts at the Coca-Cola Company, cutting 2,200 jobs worldwide, including 1,200 in the U.S. as the soda maker deepens its restructuring efforts amid ongoing shutdowns of soft drink-friendly venues like movie theaters. Shares of Coca-Cola, they are trading higher today. An update for the rest of the market. Coca-Cola up now by 0.2%. Recapping U.S. markets, looking at records right now with the S&P up 14, a gain of 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much for that update. You're listening to Bloomberg Business Week. Carol Masser along with Bloomberg Quick Takes, Tim Stenovic, and this is Bloomberg Radio. You know who this is?
Golden Lady.
What?
Did he Golden Lady? Is that what I'm hearing?
But do you know who it is?
Stevie Wonder.
Okay. Phew. Yeah, I was really getting a little nervous.
Yeah, don't worry. Sometimes I get it, Carol.
Save me now. Well done. Dave Wilson, great song. I don't know if any of you watch, okay, don't judge me, The Masked Singer, but somebody did like a Stevie Wonder, and it's just like, every time you hear a Stevie Wonder song, it's just so great.
Well, I can tell you.
Tim is judging me.
I have not. I see clips of it on Twitter, Carol. That's where I watch it.
Dave, do you watch The Masked Singer?
Off and on. I saw that Leanne Rimes was the winner.
She won. I mean, it's unbelievable, the people that they've got, like, getting into those crazy costumes and singing, but I just like music, so it's just kind of fun.
And now they got a spin-off called The Masked Dancer.
Which makes no sense. My husband and I are like, okay, you're going to put on a mask, you're going to dance around. Aren't you going to kill yourself while you're doing that? I mean, come on. I don't quite get that.
Knows? In any case,
all right,
why
Dave.
that song?
Focus us all, please.
It's the reference to gold. That's what counts. Because the chart's looking at gold mining stocks, and it's inspired by a report out of Credit Suisse, Andrew Garthwaite, who's a global strategist, among other things, taking a look at gold stocks relative to the broader market. And since he's a global strategist, he's looking at them on a global scale, specifically comparing the group to the MSCI All Country World Index, which is the broadest indicator MSCI has. It's tracking developed and emerging markets. I mean, institutional investors use it as a benchmark, And what you see when you make a valuation comparison, so we're talking relative value here, he looked at what are called forward price earnings ratios. So go out 12 months, take the projected profit, and come up with a PE ratio from there. And when you ran the numbers on the Bloomberg terminal using these indexes, you found out that as of yesterday, the gold stocks, the miners, were 36% cheaper. Now, you go back 2 years, you see they were more expensive by as much as 65%. So, the headline of the chart refers to a valuation tailspin. That's what we've seen in the stocks. In fact, Garthwaite, using some different indexes, figures that the gold miners are about as cheap in relative terms as they've been in 20 years. And he's figuring with Credit Suisse's backing that we're going to get a rally in gold, a strong bull market, as he put it, and the mining stocks are going to benefit from it. I mean, and they're already cheap, so in relative terms at least. So he's suggesting maybe you buy some. And if you want to know more, folks, send me an email. I'll get you the chart. The explanation goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
So, Dave, what's so interesting about this is I think back to what we learned about Warren Buffett earlier this year, that he bet on gold. And we know Warren Buffett looks for values. And this is sort of showing that perhaps the Oracle of Omaha, as he's called, might be onto something, right?
Well, you can certainly draw that conclusion. Like I say, my chart only goes back to 2013 or so because that's the limitation of the MSCI data on the Bloomberg terminal. But, you go back 20 years and you see that, this relative ratio is as low as it's been over that time. Well, you can understand why, someone like Warren Buffett would take a look perhaps at gold miners or gold-related shares. So.
All I'm going to say is I'm thinking to our conversation we had with Mike McGlone about Bitcoin and how maybe Bitcoin becomes the new gold going forward, especially in an increasingly digital currency world, and whether that becomes kind of the new safe haven going forward.
Yeah, and no doubt that kind of thinking plays into why it is that the gold mining stocks have fallen in terms of their valuation, relative to the broader market. So, it does fit into the cryptocurrency story that way. And by the way, we're going to come back to it with my stock of the day, cryptocurrency. Just saying.
Dun, dun, dun. That's called the deep tease.
But it's a good one for today, considering what Bitcoin has done today and yesterday.
Yeah, it's really, Dave, what do you make it? Just got a few seconds here. I do think what Mike McGlone said about it's different from the run-up that we saw back in 2017.
And the difference is that you're actually seeing sort of big money, you might say, go into it. There's a column out, I believe it's from Mark Gilbert and Lionel Laurent on
I saw
Bloomberg
that.
Opinion, talking about hey, big money's going in, but maybe you shouldn't if you're a smaller investor. So that may be well worth reading.
Right, and he talks about the increased digitization of our world, like it just kind of fits in. Dave Wilson, we'll see you in a little bit. Right now, let's get back to world and national news. Back over to Nancy Lyons in our D.C. studio. Hi, Nancy.
Hey, Carol. Lawmakers are reiterating a deal is close on more coronavirus relief. The proposed $900 billion package would likely include a new round of payments to Americans and enhanced unemployment benefits, this according to Senate Majority Leader Mitch McConnell.
We're discussing extended and important unemployment programs at the particular urging of President Trump and Secretary Mnuchin, who have continued to be the champions of cash relief for American families.
I'm placing a stop on profit for euro at 122.634. That's it. Stop on profit, please.
During the pandemic. Bloomberg's Nathan Hager reports.
The group is organized by the Interfaith Center on Corporate Responsibility. They filed shareholder resolutions saying that companies could prevent outbreaks and store closures if they let employees quarantine and recover at home while receiving pay. Walmart, CVS Health, and McDonald's are among the companies that have been contacted. CVS says it already offers paid sick leave to employees who work at least 30 hours a week and offers 14 days paid time off for anyone who tests positive for COVID-19 or needs to be quarantined as a result of potential exposure. In Washington, I'm Nathan Hager, Bloomberg Radio.
President-elect Joe Biden is adding more diversity to his cabinet. People familiar with the matter say he plans to name New Mexico Congresswoman Deb Haaland as his Interior Secretary. She'd be the first Native American to lead the agency overseeing tribal affairs. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Nancy Lyons with a World and National News Update. Carol Massar along with Tim Stenovic of Bloomberg Quick Take. And this story has trended high. It's among our most read on the Bloomberg today. It has to do with Smith College. It's one of the richest U.S. liberal arts schools. It is splitting with its longtime outside investment firm to manage its more than $2 billion endowment. I feel like, Tim, this is a trend we've seen over the last couple of years.
Yeah, it certainly is. This move from Investor will enable the women's college to have, quote, greater direct control over its largest financial asset. That's what President Kathleen McCartney and Allison Overseth, who's chair of the Board of Trustees, said in a statement that was released today. This coming from our article by Janet Lauren. This is a big move, and this is probably why it is among the most read here, because this is a significant move for the one of the richest U.S. liberal arts schools.
Well, we talk so much about the amount of money that's in colleges and universities, and these endowments, especially with some of these, universities. You go to the Ivy League, we're talking about huge, massive investment funds that have increasingly gotten into alternative assets and investments. And what's interesting is, a lot of them have often farmed it out, and increasingly we're seeing it all come in-house.
I think it also comes at a time, too, Carol, when people are questioning the value of in-person education. I mean, I went to a small liberal arts school. It was expensive when I went to it. It's even more expensive now. It's unbelievable how expensive these colleges have become. And with the rise of remote learning and colleges and universities learning what students can do off campus or remotely, I wonder if the demand is going to be there for those small liberal arts colleges later.
I do worry about what's going to happen after this year, because we're seeing that financial pressure on, as you said, some of these smaller liberal arts schools. I do wonder about it. I also just sometimes get kind of frustrated by all the money that's become part of colleges and universities when it's really just supposed to be about learning.
Yeah, I mean, in my college, it was like I was in school at the time when everybody was talking about the best dorm to live in because it had the best food. And I remember visiting with my parents, and they were like, the food in college is not supposed to be good.
Exactly.
Yeah, that's what you're paying for, among other things.
It's supposed to be part of the
food was
experience.
good, by the way, at my school.
All right, good to know, good to know. You are listening to Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. With the Dow, the S&P, NASDAQ all trading at records. Stocks are advancing on optimism as lawmakers continue to wrangle over a federal spending deal. The S&P up for a third day. Republican and Democrats still, though, unable to reach an agreement that would assist millions of Americans who face losing virus-era assistance later on this month. The important thing, though, those negotiations continuing. S&P up 17 at a record 37.18, up 0.5%. The Dow up 128, up 0.4%. NASDAQ up 82. That is a gain of 0.6%. Again, the Dow, the S&P, and NASDAQ all advancing to records. 10-year on 5/30 seconds, 10-year yield right now 0.93%. We've got gold up 1%, up $18 the ounce at $18.83, and West Texas Intermediate crude up 1.2%, $48.40 for a barrel of WTI. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
It is time for the drive to the close, and joining us this Thursday, back with us is Alan Lance. He is research director at lanceglobal.com and president of Allen B. Lance and Associates. He is with us once again on the phone from Toledo, Ohio. Alan, nice to have you back with us with Tim and myself. How are you? What's Ohio like right now?
I'm doing well. We got an inch of snow compared to your 12 or 13, I guess. So
yeah,
we'll take that. But everything's going well here in Ohio.
All right. What's the virus with you guys right now?
Well, we basically have been more open than our neighboring state of Michigan, but we do have a 10 p.m. curfew, so businesses are closed and restaurants are still open to anywhere from a 25 to 50% capacity. And so far, everything's stayed open as opposed to Michigan, which has locked down another few weeks. So.
Yeah, well, we are certainly not seeing these concerns play out in the stock market on pace to be a record day, as we heard from Charlie earlier. Alan, I want to get your thoughts on valuations right now, because our producers tell us that, one thing that you see right now is that this is different than 2007, despite the fact that we see stocks at highs and we see real estate at highs right now, too. What's your take?
Yeah, we get that question about 2007. We had warned that we couldn't really find anything in the international or domestic equity arena or real estate arena that was in bargain territory. And today, I think it's different. I can see the comparisons because we're hitting new all-time highs again. But we've had energy that's been down tremendously. This year has actually been pretty predictable. We were even though it's been a strange year and the volatility has been excessive, we were taking profits the end of January, early February. The market went up another 3 weeks, and then obviously we had the John Templeton, buy when there's blood on the street type of March, where there were some incredible bargains, and then the markets recovered as almost like a textbook fashion, where you saw the quality dividend companies moving up, right after the stay-at-home surged, and then now, the fourth quarter, we've seen the cyclical small caps and internationals catching up, so the rally's broadening out, and I think that's healthy. Well, in 2007, what we had is everything moving up from utilities in China to every category in the U.S. and we really couldn't find any bargains. We're still finding bargains here.
All right, don't judge me, don't hate me, but Alan, I felt like this was a year where you could time the market, because I thought about it early this year too. It's like we just ran up so quickly before kind of the COVID fallout, and I'm like, God, if I kind of just dropped out in February, it would have been a pretty decent year. And then, of course, when the market fell off, you knew that there was going to be, history has taught us that the government's going to help us out, the Fed's going to help us out. It was almost, as you say, kind of textbook predictable. And I do feel like we're getting to a market environment where I know it goes against everything I've ever learned about timing the market, but we know that when the market drops off, the program trading kicks in, and then the market goes up again, and then when it gets too lofty, it sells off a little bit, and then it comes. I just feel like we're getting into that kind of a rhythm.
Yeah, and it's a supply and demand, Carol. So you're totally spot on. Where now you're seeing the IPOs, but again, unlike 1999, these IPOs are still high quality. So I think you're going to get that supply filling up the demand, and then it's going to be a situation where less and less quality IPOs will come out in 2021, and that's the time again where you hate to do it, but you got to time a little bit and take some money off the table. The other thing that we like is we're seeing takeovers. We talked this summer about Alexion Pharmaceuticals, and that got a nice 30-40% premium takeover, and I wouldn't even sell it here. I think you could have another bid coming in, or I don't mind owning the AstraZeneca, because that stock has underperformed. So, where in 1999 you got a takeover, you run with it, cash it out, and you don't wait for it to close. Now you can still say that the stock's trading at historically low multiples, even being taken over. And part of that is there was a two-product company, and with AstraZeneca, it's going to be, higher margins and a multiple expansion because it was discounted because, they didn't have the pipeline and they didn't have a broad selection of pharmaceuticals. And there are still other companies like that I think offer opportunity that investors have ignored most of the year. So in that respect, it has been, unexpected year from the, volatility standpoint, but really textbook in design all the way through.
Alan, are you getting lots of questions from clients about Bitcoin right now? It's a story we've been talking about all day, hitting a new record. It's below 23,000 right now at 22,700. But is that something that clients are showing interest in?
Yeah, Bitcoin, we saw that attractive, into the sell-off again because, just even Amazon went down, in the early days of March and into the pandemic. Now, those are one of the areas and some of these cult-type stocks that, we would not be chasing. So when we get a lot of inquiries from subscribers and members about, should we be buying Tesla, should we be buying Bitcoin, it's usually a little late in the game, and we don't really want to participate.
Scott Minard says Bitcoin's going to 400,000. So I'm just going to tell you, Alan, it's way early in the game, according to him and some others. Especially if you think about it, I go back to my economics work. It's just like supply and demand. There's only going to be a limited number of Bitcoins. That by kind of its own essence just creates an entity that's going to go up.
Yeah, the problem is the same thing with blockchain is everybody has to participate. With the internet and emails, you had that. Will you have that with Bitcoin, or will something else come out? So Bitcoin in itself, if that ends up to be the digital cryptocurrency, then all that hyperbole is will come to fruition. But are you willing to take that risk that something else won't supersede it or take over? So many times when you're an industry leader, you don't end up 10 years from that day be the one that still is out in the forefront, and that's where investors have to realize the risk that they're taking.
Just wish I'd bought it when it was like,
you and me both,
fraction of a cent.
Yeah.
You could have thrown like $20 at it, even $100 at it, and it would have been.
But we'd still be here doing this because we love it, Carol.
That is actually very, very true. Good stuff. Good stuff. All right, we're going to continue tracking you to the closing bell as well. Tim Stenovic, Carol Massar, and this is Bloomberg. comes the close.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it. Sound of the closing bell at the New York Stock Exchange as we wrap up trading on this Thursday, December 17th. Folks from Avangrid ringing that closing bell. The Dow, the S&P, NASDAQ, and Bitcoin, all at records. S&P up 21 to 37.22. That was a gain of 0.6%. The Dow up today by 147 points, up by 0.5%. NASDAQ surged 106 points, up by 0.8%. So the Dow, the S&P, and NASDAQ all rallying today as lawmakers continue to wrangle over a federal spending deal. S&P 500 index up today for a third day. 10-year yield 0.93%, down 430 seconds. Gold up today by 1.1%, up $19 the ounce at $18.84. And West Texas Intermediate crude up 1.2%, $48.41 a barrel on WTI. So again, S&P up 21 to a record 37.22, up today by 0.6%. Chris Harvey is head of equity strategy at Wells Fargo Securities, and he's got this advice for investors.
Our stock market call for 2021 is very pedestrian. We're looking at mid-single-digit returns. And what we've been saying to clients for some time is if you want higher returns, if you want more competitive rates of returns, you need to look down the market capitalization, smaller caps, you need to add more cyclicality, higher COVID beta, and you need to start going into the financials.
Among today's standouts in the S&P 500 index, homebuilder Lennar after earnings up today by 7.6%. Also surging after earnings, the consulting firm Accenture, it was up today by just about 6.9%. Two of the other stocks that saw big moves today, Scopus Biopharma, that's a cancer therapy developer, it soared today by 473%. Another biopharma stock that moved today, medical technology, Vivus Therapeutics, up today by 34.4%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Whoa, yeah, what I say.
Nobody move a muscle. Bloomberg Business Week. Movers and shakers.
Damn, Stippy, you got some moves.
On Bloomberg Radio.
All right, everyone, it is time to take a look at some of the movers and shakers on this Thursday. Carol Massar, along with Bloomberg Quick Take anchor Tim Stenovic, and just quick.
I closed position on euro at 122.634. We have 200 pounds in profit.
Reels up about the same. Bottom of the pack, communication services just down about 1/3 of 1%. Energy names were down about 0.6%. And if we take a look at the S&P 500, I mean, obviously this is going to mirror what we just talked about. You did have 364 names higher today, 136 lower, 6 unchanged. So more of a risk-on trade.
Yeah, we see, as Charlie mentioned, Lennar finishing the day higher by 7.3%.
Yeah.
And we also saw another home builder, Pulte Group, higher by 5.3%.
Yeah, those housing names just continue to churn higher. Let's bring in Bloomberg News cross-asset reporter Sarah Ponczak. She's on the phone in New York City. It's amazing, Sarah, but here we are. We're, rallying to new records.
We are. We have records today in the S&P 500, the Dow, the NASDAQ, the Russell 2000, you name it, pretty much all of your major benchmarks. And you were just talking about some of these home builder stocks. We had strong earnings. We also got more strong housing data today. The housing market is surely on fire, but that is on the flip side to some negative economic data that we did get today as well, and that in the form of initial jobless claims. So today we saw 885,000 initial jobless claims. That was an unexpected increase, and this is just the next in the series. This came after last week, in which claims data was weaker than expected. This comes after yesterday, in which retail sales were weaker than expected, and yet the market continues to move higher. And I don't know how many times we can say it. I don't know how many times you can hear it from investors and strategists. The fact that the market is looking forward, and even as we continue to see that the economy is sputtering, the economy is stalling out, we are likely going to see further strict restrictions due to rising COVID cases in the next couple of weeks. We know in New York City, definitely, well, not definitely, but we know that it has been floated by Mayor de Blasio and other areas of the country where we're seeing rising cases too. But the market is just looking at that point in which we are going to see a vaccine be rolled out completely and successfully, and also the potential for a new fiscal deal.
Sarah, I'm really glad you brought up the jobless claims data that we got earlier today, because